Hi, I'm Madison, and I'm here with Mike Gary, our estate planning attorney. Today, we're talking about something we get a lot of questions about, the federal estate tax. Mike, let's start with the basics. What exactly is the federal estate tax? Yep.
So, Maddie, the federal estate tax is essentially a tax on the transfer of your assets after you pass away. It applies to the total value, the net value of your estate. So it includes things like property, investments, cash, jewelry, antiques. Um, and you get a credit for expenses for your estate. And so having a lawyer handle it, having an accountant handle it, or deductible. The luncheon that people have after their funeral is deductible. And there's no tax on the state or federal levels to anything you leave to your spouse, so someone you're legally married to. Um, it's important to note, though, that not everyone is subject to the federal estate tax.
So, who actually has to pay this tax?
Yeah, right now there's an exemption amount of $13.99 million per person. So a married couple could shield $27.98 million from tax in 2025. In 2026, it's going to be $15 million per person or $30 million for a couple. Now, that's a giant exemption. But if you're above that amount, the rate is 40%. So if you have $31 million, that last $1 million, it's $400,000 of tax.
Wow, that's significant. Why should people think about the federal estate tax now if they're nowhere near that threshold?
Yeah, so I mean, a lot of people really don't have to worry about it, but for people who do have significant assets, I think they need to think about it and plan for it because for a couple of reasons. First, your assets could grow. Sometimes people are startled by how much the passage of time and compounding of interest and your wealth occurs. People don't think about it. They struggle so hard to get that first million or $2 million, but then after that, it could grow pretty significantly. And so, even if you're not subject to it now, your stuff could grow. The other thing is that the exemption amount has always gotten higher. Um, it didn't for a really long time. And so the exemption amount was stuck in the $600,000 range for like 30 years. And now it's way, way, way higher than that. But who knows? They could change it tomorrow to be in way less. I don't think they will, but they can. So you really need to think about it, and you need to plan your will and your estate taxes. And maybe you can reduce or avoid taxes altogether.
So the takeaway is, even if you're not affected today, it's smart to plan ahead.
Exactly. Planning now can help protect your assets and make sure more of what you've worked for goes to your loved ones, not the IRS.
Thanks, Mike. If you'd like to learn more about the federal estate tax or start your own estate plan, feel free to reach out to us. We're here to help you and protect your legacy.